How's it going, everyone? My name is Kush. Today we're going to be doing a weekly watch list, and I am so excited for this week. We finally have some fucking volatility back. As you know, the last several trading sessions, we have been in a very, very tight range. It has been really boring to trade. Swings were uncertain because of that. Earnings were coming up. Overall, it was just very difficult to time stuff and get good plays in without basically doing scalps. And I'm a go big or go home type of guy, so I don't like doing scalps. If I were to do them, I just do futures instead. So why would I be, wasting time trading options and then putting myself through, theta decay and implied volatility and all the nonsense that comes with it, unless I'm doing a swing. So finally got that. Looking really forward to this week, and there's a lot of good opportunities. So without further ado, let's begin. We first, of course, always discuss SPX. So key levels on SPX are pretty simple. We have on the daily time frame over here. Actually, let's zoom out on the weekly. So on the weekly, we're forming a bit of a rollover top, right? We had this large doji with some decent volume, this bearish engulfing down to the 9 EMA, and then it's just been going slowly in this huge, massive range. As you can tell, everything has been in a range pretty much since this month right here, right? So since September, towards the end or the beginning of September, we have been in a range. The volatility has dried up. Moves up have become very, very slow. We're averaging about 0.27% on SPX for daily moves in this entire range for the last month and a half. So it's been pretty bad. I'm not going to lie. But finally, I think as volatility's ramping up, as the narratives are building, we're getting some directionality again, which is going to be good. Whatever it is, whether it's up or down, doesn't matter. Any direction is a good direction because that's what you want as a trader. So let's take a look over here. Zooming in, I'll go on the 4-hour first. We lost the 9 and 21 EMA on Friday. I would not be surprised if we reclaim it and start moving towards this trend, horizontal SR level, as well as higher levels over here. So the real ones I'm looking out for are going to be, first of all, right over here, the what is that, 68.78 over here at the 68.96, and then obviously the swing high right here at 69.05, which coincides with the top of this range. And again, if you go on the weekly chart, you can kind of see this is the top of the wick right here. Those are bullish upside targets, and obviously also going for new all-time highs. So 69.20 and above, higher. To get those higher levels that we will be looking for, you should always do a fib extension. So we go down, right? Looking over here, I can just add the 1.272 for a shorter term target. 70.27.5 is going to be the 1.272, and then the 1.618 is a further extension target, is going to be 71.64. Now, in my opinion, I think we could see some downside and chop in this area. Other indices and other majors are not looking too hot. Gold is obviously bullish as fuck and looking to break new all-time highs, same with silver. But gold and silver's correlation to equities markets is not necessarily bullish or even correlated, right? Gold has been in a huge rally almost non-stop while equities have been struggling the last several months. Crypto is completely dead in the water. Bitcoin's below 90,000 again. Gold, really is a risk-off hedge to inflation and a safety play. So it does make sense to correlate it with equities very much. That being said, now, in terms of downside targets, what am I looking for? Well, line in the sand is really going to be two areas. So this one right here, I actually already have an SR zone right there. Beautiful. This is where we closed at on Friday. Any dip below here, and we can see a fast move down to here. The reason why is when you pull up the volume profile. Let's see, fixed range, and let's just go from the top of this range, or yeah, top of this range all the way to here. You can see we have the POC right over here. Really got formed after this huge shop that happened the last 2 weeks. So a lot of volume got traded over here. A lot of dark pools got filled. If you don't know, dark pools are large off exchange private bids, basically, between institutions, hedge funds, etc. So that's where they go in order to both mask the directionality of their plays, because it does not show you whether they're buys or sells, and also gives you a fuck ton of liquidity because it's accumulating all the order books that are available. The institutions, they got a lot of bank, so they get special privileges, which also include getting more liquid order books, which also include the ability to mask whether your transaction is a buy or sell. And we have been seeing a fuck ton in the order of billions a day in dark pool flows for equities, indices, so VOO, the Vanguard S&P 500, SPY, even SPXW, QQQ has been getting a lot of flows, NVIDIA has been getting a lot of flows. So to me, in my opinion, it both is supported by the volume over here and also seems a little bearish, not gonna lie, but we'll get into that in a second. Now, in terms of why I say that a move down could happen very quick is because look at that volume drop off, right? This is what we would call a volume shelf. So right here is the shelf, and then you have the opening where the bookcases would go in, so to speak. So low volume right here, that means low resistance, low liquidity, not many orders there to support price as it comes down into it, right? And especially when you have these high body wicks forming on these candles over here, that tells you that the existing liquidity that was taken out over here is already, what was already thin liquidity is even thinner the next time around it comes down. So I'm not saying I don't anticipate price to go up. I actually am bullish for the next 2 to 3 days, really, because usually, just take a look at it, guys. Every time you have a thick body candle like this, you have a bullish reaction afterwards. Thick red body candle, bullish reaction afterwards. Thick red body candle, a little bit of a bullish reaction afterwards, right? It's only at the beginning of more downtrends and everything that we see that does not hold to be the case, but even then usually is, right? Thick body candle, bullish candlestick, even though it went down, closed higher. Thick body, somewhat bullish, closed slightly below, but really came in towards those EMAs. We're also still above the EMAs on all major time frames, the daily, the weekly, the 4 hour. We are like wedged between them really, and broke down a little bit towards the end of the day. So don't hold your horses yet, or don't let go of your horses yet. We are still in a range. We're still waiting on directionality, but the increase in volume and volatility is really signifying that something more is coming, that we're going to have a good time pretty soon. Nonetheless, that is not to say that we did not have some very good trades last week. Obviously did, but they're going to be much more abundant and clear going into the future, which is very, very exciting. Jumping into NASDAQ over here, same ordeal, but with a POC, so the highest volume node, that is much, much lower, meaning that potential downside and huge support is not going to be coming at a higher level like it is for SPX. It's going to be down here. Arguably, it's still bearish for SPX because it broke down below the POC,
right? So it no longer really has that as support. If it came into it, it would act as resistance theoretically, but nonetheless, I digress. Damn, I'm spinning bars. Okay. Now, QQQ, we have again this rounded rollover top. So we have a high with a thick body or thick god damn it, wick doji over here. A lot of chop consolidation. This rollover down, the impulse back up, and now we are curling back around. Huge, bigger volume and big candlestick going down, and we're just breaking through this low volume area on the VPVR with no accept like it rather it is finding acceptance, and that's the problem. You want, like you saw on SPX, a thick wick pushing the price back into this high volume shelf, and we're not getting that yet. So what does that tell you? Tech is weak right now. Tech is weak. Tech led this rally, and it seems like, for the time being at least, it will also lead the rally down if that comes. Usually it goes that way. So, what are the levels on NQ? Well, glad you asked. Right there is one, so you can see resistance, 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 resistance over here as well. Support, R, 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 S, S, and then S over here, right? R is resistance, S is support. Just don't feel like spamming that word. Now, other levels would be really in this range bound condition over here. It's a little tricky. So you can see clear support and resistance level right here at 25,444 or 434 rather. That was the breakdown level. It held as support here, held roughly here, 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 here. Resistance over here, obviously. Okay. And then intraday around here. If I can find something a little cleaner, maybe. I'd say that's about the best level. So 25,303. Okay. 25,434. 25,139. And then we're really either taking a big swing down into this range and this POC right here, or having a big pump back up, in which case the upside target is going to be somewhere around like here, right? So you see that was the swing high on Thursday. Then Friday comes, we gap back up, and it acts as the floor now. We fail to hold it on Monday, and we come crashing down. It acts as resistance again. We had the FOMC scam pump, and then gap down, right? Move back into it, fail to accept the next day, gap down again. So you can see how these levels are really reacting. You need to be trading the price action in real time to get any sort of insight from these, but at least having the levels marked out for yourself, it's going to be very good. Again, bias is a little bearish right now. The market's very, very iffy with the AI capex, with the data center commitments that have been promised by companies like Oracle, CoreWeave, etc., etc. In addition, you have thinning margins now with Avgo's earnings coming out. You also have the memory and RAM crisis, and now the storage problems in and of themselves. So Samsung is rumored to stop selling SATA SSDs entirely to retail pretty soon. Guys, off note from the trading, but if you want to get any PC part, please get it pretty soon, because the prices have already skyrocketed and they will continue to skyrocket. The Sam Altman mafia will not stop at all. Okay, there's no trains, or there's no brakes on this train. Fuck my life. So that's all. Now, in terms of drop target, if we drop, I could see this gap over here getting filled down to 25.20, right? And then we could have a reaction back up. But really, I'm looking for major level to major level. This POC is just screaming at me. I haven't really retested it since this Tuesday, November 25th low, and I think it would be a good spot to get a retracement, a deep value retracement, go higher. If this obviously doesn't hold, then we're really in for a bad time, because then we're getting very, very close to this range bottom. As you can see, there's another high volume node right here, which could act as support. Also aligns with the value area low. But nonetheless, NQ is looking very weak. The narratives are weak and souring. Now, let's get into something bullish to provide some timeline cleanse, shall we? Tesla. Tesla looks unironically great. So let's just remove this nonsense. As you can see, Tesla over here, we have this high at 488. Okay. Not only that, but we also have this swing high here, okay, that we're approaching. Friday was very bearish for the overall market, while Tesla, it was very bullish. So lows held at this 9 EMA, holding it the entire time for the past, since the entire week, actually. So very, very bullish accumulation. High volume candle on Friday to set it higher. It is gapping up as we speak right now. It's all looking very good. So Tesla, in addition to that, by the way, huge orders over $2.7 million and Tesla $500 calls were put in. They expire this Friday. That's something to keep an eye on. Usually when people put a lot of money on these short-term calls, obviously not every time it will be successful, but large chunks of times when people are putting huge amounts of money into an asset class that can go to zero and go to zero in such a short amount of time, and it's something to pay attention to. They probably have a good insight into the market. In addition to that, right now, just a while ago, Tesla got another reiterated outperform rating by Cantor Fitzgerald and Wedbush. So they want this going up, really. The analysts want it going up. The people betting on it want it going up. The market looks to be wanting to see it go up. So Tesla targets would be around $500. Then it would be at new all-time highs, right? So once it breaches 488, the run up to 500 could happen very quick, which is probably why all that flow came in. So the 1.272 is a little overextended for a move this week, but we could see over the next 2 to 3 weeks, really. That would give us a move from, let's see, the pre-market current price to here, about 20%, 21.46%. We like that a lot. If you're a bull and want to play calls or long side, Tesla is a chart you really want to be looking out for. It's just a beautiful structure. Look at that. Holding the 21 on the weekly time frame. We have very clear resistance, very clear chop and everything. I've gotten chopped around on this chart as well before, and I vowed to not touch it anymore, but it's unironically turning out to be looking very, very nice. Moving on to something not so nice, Nvidia. So Nvidia is looking like utter dog shit right now. We have this clear chop consolidation weakness, right? We have over here this false breakout and then go back down to the range. Really, this 180 level is key. Besides that, then also this 21 EMA at 176. If Nvidia cannot breach over 180 and get some daily candlestick closes above it, then it's kind of cooked. You know, this chart does not look conducive for much more upside. This is a clear distribution. We have this spike over here, volume picked up, high volume on this new all-time high, and it's been coming down since. Tech again is very weak. We have high volume patterns all along over here. Again, with dark pool flow has been coming in on Nvidia a lot. These two levels, they're not just marked schizophrenically for no reason. I mark them because they are two huge dark pool levels that have been coming in that also coincide with pretty solid support and resistance. So this chart is a choppy mess. It's very characteristic of a distribution. What happens with distributions at the top ends of price action, it tends to be forming a top, right? And that's why the saying goes that topping is a process, bottoming is an event, right? It's an event, guys. So, when things bottom, it will V shape recovery. You kind of know this, right? This right here was a hell of an event. Look at the volume. Look at the price action leading up to it. Look how thick the candlestick is, right? That's an event. This is a process. You see this? All of this is a process right here. It takes forever. You're getting chopped around. You don't know what's right, what's wrong, what's left, what's right. It's designed that way. Okay. The big players need time to unload. They can't just give you the fucking blow off top, right? They're trading in billions, hundreds of billions, potentially even. If they're offloading positions of that size, they need time, they need liquidity, they need volume, and that's why you get these topping events, or sorry, processes, as they call them. So, NVIDIA, I'm not really bullish on this. I think if you are, you really want to get not just above these levels right here, but also get a swing high close above 188 to form some new type of higher high and higher low structure. Technically, this is still a higher low, but it's very fast approaching that. In addition, now you are below the EMAs, you are below the SR levels, and you are still forming lower highs and lower lows overall, right? So lower high, lower low. All we need to do now is put in another lower low. We can't really know if that's certain unless we see price react down here at the 180 level. So 180, if it cannot clear this, we can expect another lower low below here, in which case I would be really looking for this rough area over here. Boom. Okay. This is going to be your major little support. As you can see, support, support, support. Sweep below. Found acceptance, went higher. Okay. 170. What is that? 175 to 173. That's your line in the sand. If you're a bull, you do not want to see price go lower. Oh, and then look at this. NVIDIA insiders are selling the stock. Director dumps 64 million shares. Sounds about right. Moving on. RKLB. So, insane rally, mostly based off of the SpaceX IPO news, right? So, a lot of companies are expecting SpaceX to IPO. SpaceX itself and Tesla Tesla CEO Elon Musk have said that the company is going to be IPOing in May, I believe. They're looking to get a $1.5 trillion IPO off that, and that has been carrying RKLB significantly. You have this multi-day huge rally with not much structure being developed the whole time through. As you can see, it's just holding the EMAs going higher and higher. We have some consolidation over here as it's kind of like struggling and getting exhausted, but it seems like it could continue. All-time high is not that much higher at $74 basically over here. Look, I don't like chasing these trends just in the middle, especially when they're chopping around the EMAs like this. It makes it so that your odds reduce significantly from an edge position to a very 50-50 coin flip type of position, right? So it could either gap down or like continue up like this. Not a fan. Nonetheless, though, I do like that we got out of this golden pocket over here, the 0.6 to 0.5, 618 to 0.5. A retracement into here to find some acceptance into both this level over here, and then this rough chop, and then move higher, build some bullish structure would be really nice. So that's the type of play I'm looking for on RKLB. If that can't happen, then once we do get a little more extended from EMAs, a pullback to them is going to be very good. But yeah, RKLB is just basically running off of Tesla IPO news, the market realizing that it should be revalued potentially much higher because of $1.5 trillion evaluation for a reusable rocket company is insane. And then what else is a reusable rocket company? Well, RKLB, right? They just launched their 19th Neutron rocket. They're set to launch their 20th, I believe, next week. Not this week of the 15th, but next week early on, just before Christmas. So 20 launches of reusable rockets there on that SpaceX trajectory, and it's looking very good for them. WDC, so the MAM and memory cartel is doing its thing again, broke new all-time highs. We were in this. I cut a lot of my positions over here the day before AFCO earnings, and then cut the rest over here. Looking pretty good. Came back down then, and then now it's trying to really find acceptance. If this can get a close in the first hour and break above here, potentially chop around a little bit, as look at really as long as it's just holding this area right here, this 178, and can get candlestick closes on the high time frames, so anything 1 hour and beyond, 4 hour and daily ideal for best RR and safety, then this can continue, fill this little gap over here, and continue even higher. $200 is in the play. Lots of people have been buying the $200 calls for January 16th as of Friday. So it is a very bullish chart. MAM and memory are huge in demand. So that means that these companies get to squeeze their consumers with exorbitant demands for price, and it basically becomes a memory cartel. So WDC, MU, and STX and SNDK, those are the four major players in RAM besides SK Hynix, which is a Korean company which most of you just can't access unless you're on like Interactive Brokers or something. So with that being said, good fundamentals going into it, good narrative going into it, a genuine price cartel that allows them to squeeze every drop out of their consumers, means that it both has good fundamentals on top of also having a really good chart. You zoom out on the 4 hour, 21 found acceptance. On the daily, the 9 EMA act as support on the bottom, right? So as long as these like the EMAs and these levels get respected, we can expect this to go higher and higher, even after a monster year. Let's look at how far up it is. So 289% year to date. Madness. Absolute madness. Alright, speaking of another mad stock, Google. Okay, so Google's been in this bull flag, had a breakout over here. It turned out to be a false breakout. We had this little news headline over here, the $1.2 billion investment, I believe, is what it said. All fine and dandy. It's small chump change for Google, to be quite honest. But Google over here had this false breakout and then came back down. I had to exit the position once it got below the EMAs because I knew a downtrend would happen. Sure enough, that is exactly what happened. So for Google, really you want to be trading the break of this, okay? Ideally, you want to be trading right at it and have your stop be very, very tight. It's a bull flag. We want to be trading the breakout. Or you want to be trading from one side of the bull flag to the other. So in this case, from the bottom to the top of it like that. We're not really going to get that great opportunities because it's already gapping up over here slightly. But nonetheless, if you can get some chop in here and scale a starter position, for example, and then scale it up over time as you go, that would be lit. Google chart is still looking very, very good, albeit a little choppy. Be patient with this one. ARM. This is another bear play. So at 126.53 right now, this is an ADR, so it has a good chunk of its price action happening in our off-market hours and the premium post-market. What can I say about this chart? I already entered long-term puts, so I say long-term, like January 16th, $120 puts. The reason why is because, well, very simply, two levels matter over here. This all-time high area at 182.5 and this area right here at 128.74, 75-ish, right? we're losing this as we speak. If you lose this, you just see consistently these huge price swings. So very volatile, right? We lose this rough area over here, boom, fat drop. Lose this area right here, boom, fat drop, and then fat increase again. Fat drop, fat increase. This area is very volatile. It is a line in the sand. So we want to respect that and use that to our advantage, right? So price coming back down into here. I want to see further continued downside. I have $120 puts, so my real target in short term is going to be right over here. So let me just show you. It aligns with the 120, so 119.71. I'm really going to be exiting most of the position over here and then having um, some runners to absorb whatever profit might be left. After that, then the chart really is a mess, but you can identify some areas of consistency. So over here, resistance, resistance, support, resistance, resistance, broke through over here, and then finally got the breakout. This would be another area I want to look at for potential longs. So $104. In addition to that, IWM, I don't know why I didn't go over this for the index analysis, but IWM is by far the best looking index of them all. So out of the big three, the SPX, the NASDAQ, and the Russell, and obviously I'm not including Dow Jones, but it's kind of boomer slop. IWM is looking the best. It's forming higher highs, higher lows, increasing volume, very good reactions. It's respecting the market structure very much. It's overall on the weekly still above everything and still looking very good. IWM is also the best benefactor. IWM and its stocks, the weightings inside of it, are the biggest benefactors of lowering rates, lowering interest rates, right? Think about it. I've said this before, but big companies, they are not as hard pressed about how easy it is to get money, to get debt, right? Everyone and their fucking mother wants to give money to the Mag 7. Everyone and their mother wants to give money to Microsoft, okay? Because Microsoft has such a strong moat, okay? It's so deeply entrenched and embedded. Shit, I mean, even CDs, not like that, but CDs on Microsoft that were at some point safer than the yields that you were getting on Microsoft that was lower than what you were getting on U.S. bonds for the equivalent time frame, which means that the market determined that Microsoft bonds were safer than U.S. government bonds, which is just madness. It's retarded. Doesn't make any sense. The U.S. bonds should always be a floor to everything else because, of course, you can't have a Microsoft if America does not exist, right? America goes down, so does fucking Microsoft. I don't give a fuck how much you try to outsource the company. It's never going to survive or thrive in India or China or somewhere else. It's reliant on America and the American people and the infrastructure and the systems and the sovereignty and the rights and all that comes with being headquartered and based in the greatest country on earth. So, nonetheless, these big companies, they don't benefit as much from rate cuts and such as the small companies do. They're the ones that are tight strapped on debt, tight strapped on money. They want more of it and they want it as cheap as possible. So IWM and its companies, the weightings inside of it, are the biggest beneficiaries of rate cuts, and thus it also has some very much more bullish catalysts and fundamentals going to it. It's also a little more shielded from the AI bubble, though if that bubble were to pop, all bets are off and anything can happen in terms of these declines. So, that being said now, that was the watch list. In addition to this, I also have some banking names that I might want to cover, but I might just do a separate video on it because some of the banking charts are looking very interesting. And we had a some interesting events going on with the FOMC as well as the banking names. Like for example, JP Morgan having insane volatility over here, and then on my broker, at least Interactive Brokers, it got fills all the way down, like a huge candlestick, all the way down to $17.33. So that's a huge order book problem, and everything makes the stocks very, very interesting and strange to trade. But as you can see over here, we have this broadening wedge on JP Morgan, all-time high at 322.22. You'd like to see it move higher, and then afterwards just take out fib levels. So we can go like this, 330 and then 340 for the 1.272, and then the 1.618 obviously. GS has just been on a tear, new all-time high, daily, daily, daily. Could see some exhaustion now and then pull back to the EMAs. If it were to come back down, I'd like to see it come back down to this range over here, right? And then continue moving higher. Why that range? Well, because let's check over here. You see, top-ish, top, climb higher. So it would be a break retest. Bank of America steamrolled through the all-time high on Friday and can continue now. With this, we want to be looking at the all-time high, but also, whoops, but also be respecting this uptrend over here. So my line is fucked up. I think I need to adjust. Yeah, okay. So as you can see over here, you both want to be making sure that it stays within this uptrend and you're aware of the uptrend that it's in, and also respecting the fib levels. So, you know, we had this extension, breakdown, and then move higher. Immediate targets would be 55.6, and then later on $57 over here at the 1.618. We're already at 55.5, so not much sustained upside. Really, the best RR you can get would be for it to go back down into this level and then move back higher. So that's the game plan on BAC and other stocks. Robinhood, for example, this was a short candidate for me. So hope you appreciate the video. I'm trying to give you both some short plays, some long plays. You know, there's a lot of variety and good options in the market now. So it's an interesting time, and I think a lot of creativity comes in very, very handy right now. But with Robinhood, what can I say about the company? So up massively this year. Just looking at it from January, $37 to its all-time high at 150. This was over a 5x just off common stock. Disgusting growth, but the company itself is starting to see some drawdowns in both the account size, account utilization, and the number of transactions and volume that they're trading. Retail is just getting fucking cooked. So it's not a surprise. Retail is getting cooked. Average person is pretty broke right now, right? Let's just be real. And who does Robinhood cater to? It's the average guy, right? So they're struggling. These numbers are coming out, hence why this huge reaction down. This could continue for a while because this is not something that can just be fixed like overnight. You know, this is more systemic, more broad-ranged, more of a problem with the economy overall. So yeah, thank you all very much for watching. Have a great rest of your day.